Good morning, good afternoon, and good evening, and welcome to today's webinar on spatial spillovers of Chinese infrastructure projects on economic activities in sub-Saharan Africa, hosted by the Global China Initiative of the Boston University Global Development Policy Center. The Boston University Global Development Policy Center, or GDP Center, is a university-wide research center that works to advance policy-oriented research for financial stability, human well-being, and economic and environmental sustainability across the globe. My name is Rebecca Ray, Senior Academic Researcher at the GDP Center. Amid a weak and uneven economic recovery in the Global South, regional development and infrastructure investment seem to be critical to sustainable development. In particular, infrastructure provision is seen as an unmissable driver for development in sub-Saharan Africa. Over the past 20 years, China has grown to be the largest lender for and builder of infrastructure in sub-Saharan Africa. But how have Chinese investment projects impacted local economic activities in sub-Saharan African countries? And are there spatial spillover effects from these infrastructure projects across regional borders? To discuss these questions, today I'm joined by Yan Wang, lead author on a recent publication on this subject, Direct Impacts and Spatial Spillovers, the Impacts of Chinese Infrastructure Projects on Economic Activities in Sub-Saharan Africa. Yan Wang is a senior academic researcher at the Global China Initiative of the GDP Center and a senior visiting fellow at the Institute for New Structural Economics of Peking University. She's also a consultant to the World Bank Group, where she previously worked for 20 years as a senior economist and team leader. She also served as coordinator of the OECD Development Assistance Committee and China Study Group. I'll ask Yan to give us a brief overview of the recent paper and its findings, and then move into an informal conversation. Yan, please take it away.
Thank you very much, Becky, for your kind introduction. It's my great pleasure to present to you this new paper that I co-authored with Yinyin Xu. I would like to first thank my co-author Yinyin Xu at Cornell University for co-authoring this paper, and thank GDP Center for this event. Now let me share my screen. Can you see my screen? Sure. Can you see my screen? Yes.
Yes.
So as Becky has said, the title is the spillover impact of Chinese investment in economic activities in Africa. As you all know, that China has grown to be the leading financiers of infrastructure and the builders of infrastructure in Africa. This chart shows the ups and downs of China's loan to Africa in 2022. After building so many infrastructure projects, at least about 1,000 has been completed. Now, what is the impact of this infrastructure projects, and is there a spatial spillover effect? In theory, it is perfectly possible to have spillover effect. Paul Krugman's 1991 book marked the birth of new economic geography. At least when the firms select locations, they must consider all sorts of costs. High transportation costs usually imply the dispersion of economic activities, and low transportation cost will encourage spatial concentration or agglomeration. So this chart shows the impact, the theoretical framework. And you are looking at the two markets. One is home market, one is neighboring market. So if you are the head of Amazon, you select the location of your headquarters, you have to compare the advantages as well as transportation costs in the two markets. And the local governments, they also compete with each other to gain the trust of big businesses, small businesses, and they compete on the basis of taxes for business, and also social services, education and health on the staff of the businesses, and also for the local citizens. So we are benefited from the Boston University GDP Center's several databases. One of the database is China's Overseas Development Finance Database, and this is already a geocoded database, and which allows us to know exactly where the firm or where the project is located using geocoding. So we are very fortunate to have benefited from the team work, including Becky's work on the geocoding of this database. Our explanatory variable is the CODF infrastructure project, and we have 258 infrastructure projects committed in this time period, spanning 727 studied regions. These studied regions are 2 levels down the national level. So we call it ADM2 regions. And there are 4 sectors: power sector, telecom, transportation, water, and including water treatment. So these charts shows the location of each of the sector and each of the projects. Secondly, the unit of our analysis is the spatial coverage is the 4,358 studied regions, 2 levels below the national level, in 48 sub-Saharan African countries. The total number of observation is 61,000. So this chart shows the location, the border of this ADM2 county level, the border of the counties. This is our dependent variable. The dependent variable is the satellite collected nighttime luminosity data. So that is also publicly available data. As you can see, in 2021, African continent is much more brighter, lighter, and economically active than in the year 2008. So this is very encouraging. And I will skip over this complicated data processing, geoprocessing steps. So basically we have to identify each of the project and merge the projects with the regional borders and merge the World Bank projects together with the larger projects and merge the satellite data together with the projects. And eventually we got a panel data set ready for analysis. So I will go straight to the results, skipping all the technical details. The first set of the result is the aspatial model, and which used the normal DID method. We run it for total projects as well as by sector. So we run the 5 equations here shown in this table. Each column is an equation, and we can see that the Chinese projects have positive and significant impact in all the sectors except in power. But World Bank projects have no significant impact. We controlled for country fixed effect and locality fixed effect and time fixed effect. For the second set of results, we used the spatially lagged X model. And on the right-hand side, the column 2 and 3 show the spatial Durbin linear model. And you can see we controlled for country fixed effect, subnational fixed effect. And after controlling for all these effects, we found that Chinese projects are significantly and positively related to nighttime luminosity. And also spatially weighted Chinese projects are also positive and significant related to nighttime light. The existence of at least one project is associated with a roughly 5 percentage point direct increase in nighttime light, and about a 10 to 15 percentage point increase in nighttime luminosity as the spillover effect. So in conclusion, Chinese infrastructure projects increase the economic activities in the second subnational level in the sub-Saharan Africa through direct impacts as well as spillover effect, spatial spillover effect. Whereas the World Bank project in Africa do not have any direct or spillover effect. In our view, previous some studies that has failed to include the spatial factors may have underestimated the total impact. There is a limitation in our study. Our study only focuses on the one aspect of economic activity using nighttime luminosity. However, you can use many other indicators. This study cannot replace detailed project monitoring and evaluation using the other indicators, social indicators. The conclusion, the policy implication is that to build a higher quality BRI, China needs to enact a foreign aid law mandate, data transparency, and enhance the capacity in monitoring and evaluation. I will stop here, and I look forward to your questions, Becky. Stop share.
Well, thank you for that insightful introduction to your work. I'd like to start by asking you broadly about your motivations for this type of work. What led you to ask about these specific research questions?
Africa is dear to my heart. Actually, when I was working at the World Bank, I visited at least 10 African countries, mostly in the Eastern African region. And I found that Africa at that time was very much like China 40 years ago, before the economic reform. I was sent to the countryside in China for 3 years for manual labor. At that time, in that village in the northeast of China, there was no electricity, no roads, and all the roads are muddy, and there was no doctor, there was no electricity, no running water. So I feel the pain in the villagers that this lack of infrastructure has created a huge barrier for their poverty reduction, for their welfare. So I have been studying on the infrastructure, importance of infrastructure at the World Bank and thereafter. So my first paper with Yinyin Xu, we investigated whether the completed projects in Africa has addressed Africans' bottlenecks. Actually, we found that in the 500 completed infrastructures, 80% of them have addressed Africans' bottlenecks.
Thank you for that. This topic of Chinese lending for sub-Saharan African infrastructure investment in particular is a frequent topic in the news recently, as several African countries are working their way through debt restructuring processes. In this context, some observers can be heard saying that China brought a debt trap to Africa, or that Chinese banks are mostly profit-seeking with benefits mostly accruing to China. Can you give us your view on that topic based on your research? Thanks.
My main argument is that China has been building public assets in Africa, including the roads, the power generation stations, the telecom infrastructure, and as well as the water reservation and so forth. So these are public assets. So public assets and the liabilities are two sides of the public sector balance sheet. Building public assets helps to counterbalance the liabilities on the other side. So without liability, maybe the country has difficulties to build public assets. So they are two sides of the balance sheet. Another thing regarding the profit seeking, actually, China is rich in patient capital. So Chinese state capital usually they are long-term. They have a long-term view, and they are not seeking short-term benefits or short-term profitability. So their rates are usually concessional rates. And in addition to that, there are many risks that they have not taken into account in earlier stages. For example, the climate change risks, severe weather, etc. There are now geopolitical risks they have not taken into account earlier. So now they are facing huge risks in completing these infrastructure projects. So I expect that any profit, if any, will be lowered. If any, they have actually underestimated the risks in the earlier years.
Thanks. Those are some really important points. I'd like to contrast that a bit with what you found from World Bank infrastructure lending or World Bank lending in general. Why do you think your results show that World Bank projects have no or very few economic spillover effects?
Yeah, I was working at the World Bank for 20 years, and I have been, many of my colleagues have been supporting infrastructure investment. However, in the last 2 decades, that the World Bank has avoided large, huge infrastructure, such as hydropower stations in Africa. So there are high risk, and it's a long-term high risk, and also the expected returns cannot be shown over 20 or 30 years. So the World Bank has been focusing a lot of loans on human resources, on education, health, and as well as building government capacity, like governance in Africa.
All very important things, of course, but not necessarily reflected in economic spillovers of nighttime light. Thank you. I'd like to dig into now a little bit more of the meat of your methodology and how you did the work that you did. It is noteworthy, and thank you for pointing out that you used the China's Overseas Development Finance database that we produce here in the GDP Center. Could you explain a little bit for our audience what some of the advantages are that using that data set may bring to spatial researchers like yourself?
Yeah, you are an expert of that database. Thank you for your contribution in geocoding the database. The CODF database collected all the projects commissioned by the two big banks in China, the China Development Bank and the China Exim Bank, over the years across different continents, including Africa. So it's a very valuable database, and the advantage is it is geocoded, so I know exactly where each project is located. That's allowed our analysis in a spatial spillover effect.
Thank you. And to close up the discussion, I'd like to ask you to look forward with me a little bit at future prospects and the decisions that policymakers, both in China and Africa, have in front of them, as well as lenders and borrowers. Many scholars have noted, including on our team at the GDP Center, that Chinese development finance institutions, the two big banks that you mentioned, China Development Bank and China Exim Bank, have been pivoting in the last few years away from large infrastructure projects towards smaller projects and smaller lending in general, not just smaller totals on the aggregate, but smaller average sizes of each individual project. And that's similar to the difference that you noted between China's large-scale infrastructure and the smaller scale project that the World Bank has been lending to. And so given that tension, I'd like to ask you if you have any policy recommendations, either for Chinese development finance institutions or African borrowers, about what kinds of projects may still be worth supporting, even in this time of greater focus on risk management and smaller projects? Thank you.
That's a big question. It's difficult to answer, but China is trying to build a high quality BRI, Belt and Road Initiative. So in order to build a high quality BRI, China needs to enact a foreign aid law, which should define all the definitions of different flows, different lending practices, as well as the regulations and standards, including environmental and social standards in the projects. The foreign aid law should mandate data transparency in the client countries, as well as increase the accountability. So after a project is completed and after the project is just completed, you should do this completion report. And then after 5 years after completion, you should do this impact assessment. So I have worked at the World Bank, so we pay a lot of attention to the evaluation, monitoring during the projects, and the evaluation at the end of the projects. So China has learned a lot from the World Bank evaluation work. So China needs to build capacity in monitoring and evaluation. So this is important. This monitoring MIE framework should not be a missing link in the BRI. So for example, China has completed at least 1,000 projects in all the continents. And then those completed projects should be evaluated in all the benefits and costs and rate of return, et cetera, and whether it's up to the standard in environmental standards and et cetera. So given we have so many advanced technology, including satellite collected light time, luminosity, all these can be used in monitoring and evaluation.
Those are some powerful recommendations. Thank you very much for them and for sharing your thoughts with us today. And thank you also to our audience for joining us. If you'd like to receive updates for future events and future research from the Global China Initiative of the GDP Center, you can subscribe to receive our newsletters at www.gdpcenter.org. www.bu.edu/GDP. Thank you all and see you next time.
Thank you.